There is an $84 trillion story being told right now, and most of it is a lie. For years, the financial media has repeated the same promise. The greatest transfer of wealth in human history is coming. Baby boomers will pass trillions to their children. It will be the largest inheritance event the world has ever seen. But that is not what is happening. Behind the headlines, a machine has been built. A machine designed to intercept that money before it ever reaches the next generation. And the people running it are counting on one thing, that you never figure out how it works. This video exposes 4 mechanisms that are quietly draining generational wealth right now. Not theories, not predictions, systems already in motion, perfected over decades to extract money from families exactly like yours. Because here is what nobody says out loud. The wealth transfer is not a gift. It is a battlefield. And most families do not realize they have already lost until it is too late. The average American will spend their final years not enjoying retirement, but funding an industry designed to drain every last dollar from their estate, the single largest expense most families never plan for. Long-term care. A private room in a nursing home costs over $108,000 per year. In some states, much higher. A 3-year stay, in 3 years is the average, wipes out more than $324,000. Here is what makes this a machine, not just an expense. Medicare does not cover long-term care. This gap catches millions of families off guard every year. Medicare pays for hospitals, it pays for doctors, it does not pay for a nursing home, not for the long term. So who pays? You do. Out of pocket, until the money runs out. Medicaid does cover long-term care, but only after you have spent down nearly everything, your savings, your investments. In some states, your home. The system is architected so your wealth gets consumed first. A couple who spent 40 years building a nest egg, saving, investing, doing everything right, can watch it evaporate in 36 months. Before a single dollar reaches their children. The financial industry knows this. That is why the long-term care insurance market exists. But those policies come with their own traps. Premiums that rise every year, coverage limits buried in fine print, claims that get denied. Study after study shows the same result. The vast majority of inheritances are smaller than heirs expect, or never arrive at all. And long-term care costs are the #1 reason. The inheritance your children are counting on? In millions of American families, it has already been spent. On a nursing home bed nobody saw coming. But what about the house? For most families, the home is the single largest asset they own. And the banking industry has figured out exactly how to make sure it does not survive the transfer either. The mechanism is the reverse mortgage, marketed as freedom. Here is the pitch. You are house rich but cash poor. Your home has hundreds of thousands in equity trapped inside. A reverse mortgage lets you unlock it, tax-free, without selling, without monthly payments. You stay in your home. The bank sends you money. But here is what the advertisements leave out. A reverse mortgage is a loan, and like any loan, it charges interest. The difference? You are not paying that interest each month. It compounds, quietly, in the background, year after year. After 10 years, a reverse mortgage starting at $200,000 can grow past $350,000. After 15, it can double. Meanwhile, the fees pile up. Origination fees, mortgage insurance premiums, servicing fees, closing costs. On a typical reverse mortgage, upfront costs alone exceed $15,000. Now, here is the trap. When the homeowner dies or moves out, the loan becomes due. The estate has to pay it. In most cases, that means selling the house. The home you spent 30 years paying off, the home you plan to leave your children, goes to the bank. Your heirs get whatever is left, and often nothing is. Over 50,000 new reverse mortgages were processed in the last year alone. 50,000 families who signed away their largest asset, most without fully understanding what they agreed to. The family home was supposed to be the bedrock of the great wealth transfer. For millions of Americans, it has become the bank's retirement plan, not their children's inheritance. But even if your money survives the care homes and the reverse mortgage trap, there is another layer. Before a single dollar reaches your heirs, an army of professionals lines up to take their cut. This is the part nobody discusses, because the people who benefit are the same ones writing the advice columns. When an estate goes through probate, the legal process of distributing assets after death, the costs stack up fast. Attorney fees, court fees, executor fees, appraisal costs, accounting costs. A typical probate process consumes 3 to 7% of the estate's total value. On a $500,000 estate, that is $15,000 to $35,000, gone before anyone in the family sees a cent. But probate is just the start. The wealth management industry has built an entire ecosystem around transferring assets between generations. Estate planning attorneys charge thousands to set up trusts and charge again when those trusts need updating. Financial advisors collect annual fees, often 1% of assets under management, year after year. Insurance companies sell products that promise to protect wealth but primarily generate commissions for the agents who sell them. Added together, the inheritance industrial complex can consume 10, 15, even 20% of an estate before it ever reaches the heirs. Many of these professionals do valuable work. The problem is not that they exist. The problem is that nobody tells you what it all costs, or that simpler, cheaper alternatives exist. Your wealth does not transfer, it evaporates. One fee, one commission, 1 percentage point at a time. And the industry profiting from that evaporation is counting on you, never adding up the total. There is one more force, one that cannot be negotiated with, cannot be sued, cannot be avoided. And it may be the most powerful transfer mechanism of all. Inflation is not just rising prices. Inflation is a transfer of purchasing power. From savers to debtors, from the old to the system. A dollar today will not buy what a dollar bought 10 years ago. And a dollar 20 years from now will not buy what a dollar buys today. Apply this to an inheritance. Suppose you leave your children $500,000. On paper, significant. But if inflation averages just 3% per year, and historically it has often run higher, those dollars lose nearly half their purchasing power over 20 years. And $500,000 received in 2045 will buy roughly what $275,000 buys today. This is not accidental. Governments around the world have spent decades running deficits and piling up debt. One of the quietest ways to manage that debt, let inflation run slightly ahead of interest rates. Economists call it financial repression. When inflation exceeds the interest rate on your savings, the real value of your money shrinks. The government benefits. Its debts become easier to repay in devalued dollars. Savers and retirees lose. Their purchasing power silently drains away. The United States federal debt now exceeds $36 trillion. Annual interest payments approach $1 trillion. There is no realistic scenario where this debt gets repaid in full value dollars. Inflation is the escape valve, and every retiree holding cash or bonds helps pay for it. The inheritance your children receive will be in dollars, but those dollars will not buy what you think. Inflation is a tax, the only tax you pay without ever receiving a bill. Add it together. Long-term care costs consuming an entire retirement portfolio in 3 years. Reverse mortgages turning the family home into the bank's asset. An inheritance industry extracting fees at every stage. And inflation, silent, relentless, eroding whatever is left. The story of the great wealth transfer is a story about $84 trillion moving between generations. But the real story, the one that matters, is how much of that money never arrives. This is not about fear. It is about clarity. The families who understand these 4 forces can plan for them. They can buy the right insurance, structure their assets the right way, protect what they built. The families who do not understand, they are the ones funding the machine. The $84 trillion wealth transfer is not a gift. It is a battlefield, and the battle is already underway.